Hello. Welcome to my channel, my dear friends. My name is Abhilash and I'm a trader next door. In this video, I'll be analyzing the chart of pound, dollar, GBP, USD for Friday. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So this is the 1 hour chart of DXY US dollar currency index, and yesterday we saw some recovery on the chart of DXY, but again it came down to the original position where it was. So 107.20 or 107.15, this is the temporary resistance for DXY for this Friday session, and obviously we have 107.60 to 108 as the big resistance on the chart of DXY. Okay, so during the day, if the volatility of the market remains like this, then you can expect the market to reverse from the previous level here, and especially during the US session, if market shows a big green candle, then you have got 107.60 to 108 level as the resistance to provide some selling to the market. Why we are considering this level as resistance? Because of 200 moving average and previous support around this area, which will now act as the resistance. I do not want to repeat the same stuff. You can watch one of my previous videos where we have discussed in detail about 107.60 to 108, why it will act as resistance. On the other hand, we have the trend line acting as the temporary support for the market. So as long as market is slow, dull, sluggish, you can expect the trend line to provide support to the market. In case of a fall, we have 105.30 to 105 as the big support for DXY. But right now market is slow, there is not much movement or volatility in the market right now. Okay, so do not have some unrealistic expectations from the market. And if you look at the economic calendar here, then you can see for US dollar we have existing home sales coming up and for GBP we have retail sales coming up, so this will bring some volatility to GBP. But yes, retail existing home sales, okay, yes, there can be some volatility for 1 or 2 candles max, because this is not a big event like NFP or FOMC. Now let's have a look at a chart of GBPUSD. My dear friends, after this bullishness, if we just focus on the present trend of GBPUSD, then we can see that overall the market was bullish for the last couple of days, but right now GBPUSD looks sideways. It looks like a choppy market. So day traders, okay, especially day traders, you cannot consider this market as an uptrend market. So consider it as a sideways market and trade accordingly. As you can see that I have already marked few levels here. So let's discuss one by one. So first of all, let's discuss about 1.1960 and 1.2000 level. As you can see that right now market is going up. Okay, right now market is going up. So if you already have a buy position, then beyond the trade, no need to exit. But if you are looking for a fresh buy position, then this is not the right time. Because if you take a buy position here, then your stop loss will somewhere be around here. The risk to reward, the ratio does not match here. So kindly leave it, just wait for the right opportunity. Keep in mind that there is a very thin line between a trader and a gambler. Be a trader, not a gambler. So if market goes up from here, then the first resistance will be around 1.1960, around this level, because of previous price rejection. So once market reaches this level around 1.1960, observe the market and see. If the volatility of the market remains like this, if you see the market is going up, forming small green candles, you can expect the market to reverse. If market reverses, if market shows shooting star pattern or any good price rejection from above, will give you the confirmation that yes, you can initiate a sell position and you can take a sell position. If not trend reversal, at least you can expect a profit of 30-40 pips. See, so if market reverses from here and comes down till here also, okay, you will be earning a decent amount of pips. 30 to 40 pips is decent amount in this slow market at least. Okay, and on the other hand, if you see that market is volatile, okay, market is breaking this resistance and going up, in that case you can expect the market to reverse from 2000. See, I have used the word around because see, this is a big resistance zone here. So once market will enter this resistance zone, it can reverse from here also, because this is a big resistance zone for the market. Once you see that market is reversing from the resistance zone, once you will see the market is showing considerable price rejection from above, you can go for a sell position. Why I'm saying this? Because see, we have got retail sales coming up, so it may bring some good amount of volatility on the chart of GBP USD. Okay, so this level may fail, but this level should not fail. Let's wait and watch. Okay, anyway, see, no level is permanent in the market, so trade with proper confirmation. A confirmation is the insurance of traders. Do not gamble with your hard-earned money. And in case market comes down, then we have got 1.1740 to 1.1720 as the support for the market, because of previous price rejections. Okay, and we also have the 200 moving average coming up. The red line is the 200 moving average, so we can hope that all the factors will bring some buying in this zone, and we can expect the market to bounce. So if market bounces, you can go for a buy position, but taking any buy or sell position around this level can be quite risky, because as you can see that market is choppy, market is sideways. Okay, so do not lose your patience. Just wait for the right time. And one more thing I would like to add here is that, see, Monday mornings, okay, Monday mornings and Friday evenings are not very good to trade. I'm writing here Monday mornings. Okay, I'm just going off the topic here, don't mind. Monday mornings and Friday evenings are not very good to trade, because in Monday morning, okay, Monday morning, especially during the Monday Asian session, market is more or less silent because of low volatility. Okay, so, and as you all know, the low volatile markets can be quite dangerous. There can be some unexpected moves in the market as well. And on the other hand, Friday evenings can be dangerous because see, Asian traders, okay, prefer to book their profits, because, for example, traders like me, okay, do not prefer to keep their positions open during the weekend. So if traders like me, let's say, okay, millions of traders like me, okay, closes their position during the weekend, before the weekend, during the Friday, okay, especially in the evening session, okay, then obviously it will again lower down the volatility of the market, lower down the liquidity of the market. So it can also bring unexpected spikes. So please be careful. Bye bye, take care. And please be careful during the news. Use proper stop loss and risk management. This is my analysis. I can be wrong as well. No trader is 100% accurate. So follow proper risk management. Bye bye. Take care.